Well, one, it's great to be here today, and I certainly think the IPO market has been really strong over the last 2 years, and I'm sure you remember all the predictions that the IPO market was doomed to really be delayed forever because companies could stay private longer. We're finding out that permanent capital you get through an IPO is an essential part of a company's life cycle. So the fact that this IPO is doing well, I think is certainly important and will encourage others to come forward. But I think it's important to recognize the IPO is the only way for investors and companies to enjoy a permanent relationship, a permanent capital relationship.
But Robert, are you suggesting that the retail investors aren't going to get the best part of this company's life, that it stayed private too long and the valuation is more of a stretch?
No, I didn't suggest it at all. I'm really suggesting that the predictions of companies not coming public are proving to be incorrect. And certainly when you look at a company like Lyft or anybody who's innovating in the space, they can have tremendous growth in front of them. And we've seen that with other companies that have come public somewhat later in their lifespan. I don't have a particular opinion on Lyft, but I know many companies really accelerate their growth post-IPO as opposed to pre-IPO.
Bob, do you think that, there was this line out there that the private markets were so deep that indefinitely companies could stay that way and not worry about an IPO? What do you make of the fact that even if that's still the case, you have this many large companies deciding that they want to kind of open up to the public markets? Can it get to a point where it has negative implications that they're doing it now?
Well, I think it's fundamental to understand companies that are private are primarily funded by either venture capital funds or PE funds. These are funds that have a certain lifespan to them, and at a certain point they have to return liquidity to their investors. So there's always a ticking clock. Now that can go longer than it did certainly 20 or 30 years ago, but the clock is still there. It's also important to recognize that investors, once you make that investment decision, it's important to know how you can get out. And to get out of that investment, you make that decision to buy. You also want to be able to freely make the decision to sell. And the IPO allows that to happen. And clearly you see these companies recognizing that fundamental terminal state.